24 years with this project. You spent 130 million bucks to date. Market cap, as you say, circa 30 million bucks. What have you spent 130 million bucks on? Why should anyone give you any more money? Could you have done anything differently? Because this doesn't all just come down to the price of cobalt. You know, you've got a very, very large integrated project here and people aren't giving you the value for that. Whose fault is that? The market's fault or is it your fault? How are you gonna deliver value for the, I imagine, long-suffering shareholders in any time in the next 2 or 3 years? I mean, how do you accelerate a process? In fact, what is the process? Hello and welcome to Crux Investor. We spoke earlier today to Robin Goad, the CEO of Fortune Minerals. They're a cobalt, gold and bismuth development company in Canada. So far they've invested $130 million. The market cap is sitting at only 30 million bucks and it's 24 years in the making. Robin gives us the explanation as to why he thinks this can move forward. He's searching for a strategic partner is one, but take a look at some of the other reasons in the description below. Click on the relevant topic if you're interested in it to go to that part of the video. And if I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And of course, if you want to see more videos like this, please click the notification bell. Anyway, let's hear what Robin had to say. Hello, Robin. How are you, sir?
I'm well, thanks. Yourself?
Yeah, good. Thanks for joining us. News story to our subscribers and viewers. So we always kick off with a 1-minute summary of the company. So why don't you give us that?
Sure. So we are a Toronto Stock Exchange listed mineral development company in Canada. Our primary asset is called the NICO Cobalt-Gold-Bismuth-Copper development, which is a project that's very advanced. It is going to produce 2 critical minerals. Those being cobalt and bismuth, both of which are on the critical minerals list for the United States as well as the UK. And we will be a reliable, ethical source of cobalt for the rapidly expanding lithium-ion battery industry, and particularly facilitating the transition to electric mobility, electric cars, also portable electronic devices, and stationary storage.
Great, thank you very much. Nice summary. So let's start with a little potted history of the business. So how long have you been involved with it and how long has the company been going?
Okay, so I founded the company in 1989. We've had a fairly long history of with a number of projects in various commodities in Canada. Our expertise is primarily in the Northwest Territories or the Canadian Arctic, where we think that there is a tremendous opportunity where large world-class mineral deposits can still be found on the ground as opposed to deeper sourced materials in the more developed parts of the country.
Okay, so how does the business operate? So in 1989, that's obviously a long time ago. Have you started projects, exited them during that period, but kept the vehicle, or have you been running the same projects the whole time?
Yeah, that's correct. I mean, we previously had a silver mine in Colorado. We had the world's largest development asset of anthracite metallurgical coal. We won the bid to purchase the Ridley Coal Terminal in Prince Rupert, but now very much focused on the cobalt asset, which was an in-house discovery. We discovered the project in 1996. And not only is this a critical minerals deposit, but it's also belongs to a very unique and prolific class of mineral deposits called Olympic Dam, or IOCG type deposits. So it has world-class mineral potential. We've spent $130 million to date on the project, which is vastly more than what our current market capitalization is, and we're now at the project development stage looking for project financing.
Okay, I've got to ask. So in 1996, that's 24 years with this project. You spent 130 million bucks to date. Market cap, as you say, circa 30 million bucks. And I know there's a 2014 feasibility, and we'll move on. We'll come back to that. But what have you spent 130 million bucks on? And why are you not getting value for it? I think would be the important question to ask.
Well, this is actually one of the challenges that the world is facing in raw material procurement right now, because increasing regulatory environments, greater permitting times. It's very difficult now to bring on a mineral project in short order, and that's actually part of the story about why we are well positioned right now for investor interest, because we have actually gone through this long process of
but 24 years. 24 you were a young man when you started this, so 24 years. What have been the actual holdups there? And coming back to the question, what's 130 million bucks been spent on?
Sure. 7 years in an environmental assessment process. Many years doing engineering and drilling. Probably the most important holdup recently has been waiting for a government-sponsored road to the project, which is now under construction. So the government of Canada, the government of the Northwest Territories, and the Tlicho Indigenous government are all collaborating on a $200 million road to a nearby community, which will enable our project to proceed. Because our project is comprised not only of a mine and a concentrator, but we have to get those concentrates down to southern Canada for downstream processing. So we have test mined the project. That was a $20 million exercise. Even though it's an open pit project, we've driven an underground ramp. We have 2 kilometers of underground workings, and we've done pilot plant studies. So we've taken material from that pilot plant, and we've actually processed that through to a number of different cobalt and bismuth products. We piloted the manufacture of cobalt carbonate, cobalt cathode, cobalt sulfate, as well as bismuth ingot. We actually own the Golden Giant Mine mill in Hemlo, Ontario, and we're going to salvage that mill for transport up to the Northwest Territories. However, because of the permitting delays, that equipment unfortunately kind of expired, and we had to sell it. So that was it is an expensive and time-consuming process now to develop mineral projects.
Sure, but okay, I come back to this. It's 24 years. It's 130 million bucks. And I'm not quite sure how that. I didn't quite hear how the 130 million breaks down specifically by, type of expenditures. Are you able to do that? Are you able to break that down for me in terms of silos? In terms of,
I could do it very generally, but but it would be a thumb suck.
Sure, let's give it a go.
So 20 million in underground test mining, probably something in the order of $20 million in metallurgical test work and piloting. I'm sure there is. We've done 3 feasibility studies, probably collectively totaling something in the order of 10 or 15 million. We've drilled 335 drill holes. I'm sure there's at least $10 million of work in there, including camp cost analytical, establishing camp facilities, the Hemlo mill. Taking that down was something like $15 million. So I don't know where we're totaled right now, but it's
but we're at 80. 50
okay,
to go.
So there's engineering, geotechnical studies, road construction, permitting costs, the environmental assessment process for the mine and the concentrator was probably 10 million. Another 5 million for the refinery in Saskatchewan. Acquisition of lands for the refinery was a few million.
Right. Okay. So that's helpful. I get it now. So let me just, as an investor, try and understand where we're at today, because that's a lot of money. You're not getting any value for that. You're 30 million market cap. I think I can sense the frustration of people are not giving you the value for that. And there's a lot of moving parts. There's a heck of a lot of moving parts. This is a big project. I looked at the feasibility study. It's a big project. What would you have done differently or could you have done anything differently? Because this doesn't all just come down to the price of cobalt and the
no, there are lots of things, but but historically, if we had 20 years ago or 10, no, let's say 10 or years ago, we would have walked into an investment banking meeting and talked about the opportunity in cobalt.
Yeah.
That would have taken half the meeting, and then as soon as I mentioned the word bismuth, their eyes would gloss over. Now we don't obviously have to do that because everybody's sensitized to what the value of cobalt is, but that wasn't always the case. What could we have done a little differently? Lots of things. We made a mistake over the last couple of years in expanding the project from 4,650 tons per day to 6,000 tons per day, thinking that there would be an incremental opportunity in through economies of scale for reduced operating costs. In fact, the opposite happened because we are not a typical mining project. We're actually more analogous to a process project or a refinery or chemical plant with a captive source of raw material. And when we invest in expanding the project, a 30% expansion, you're also expanding the cost of the refinery as well as the concentrator as well as the mine. We went through a process because the strategic partners that we were in discussions with, battery companies like LG or Samsung, were all looking for a significantly greater amount of cobalt than what we had planned to produce. Now we're refocused back on where we were before at 4,650 tons per day. Even though it's primarily open pit, there will also be underground mining because the near surface resources are lower quality. There's a pre-strip, so we have to mine some higher margin material, which is particularly gold rich at depth to accelerate the payback. It's a complicated project. We have revenues coming from 4 different minerals. From cobalt is the dominant metal. And just to put things in perspective, we're about 3.5 million equivalent ounces of cobalt or of gold, I should say, and maybe 2 of that is from cobalt. 1 million ounces of actual gold contained in the project, and another 500,000 or so attributed to bismuth. The copper is a relatively small byproduct metal.
Right. Okay.
We are also operating in an area of without much infrastructure, so you had to do lots of engineering on different kinds of energy sources. We've looked at diesel, at linking to nearby hydroelectric facilities, compressed natural gas, liquid natural gas, as well as green energy solutions, including wind and solar. And we'll be operating this mine initially on LNG. That is the most efficient energy source.
Right. Okay. So thanks for that. Again, a lot of moving parts there. So I'm interested in what you said there. You're kind of like you've got a mining component, and then you've got a processing component, and you're a very large integrated project. That's the picture you're painting there, right?
That's absolutely correct.
So do you think people are struggling to comprehend this much bigger story? And do you think that's part of the problem you're facing at the moment, certainly in terms of around valuation?
No, I think right now what people are looking for is, yes, we believe you've got this fantastic resource in the ground. We now recognize the critical minerals and that cobalt is going to be an important metal in the future. So it's really now demonstrating that we can finance the project. Now you're looking at a feasibility study that was done in 2014. Mm-hmm. It's out of date. Mm-hmm. We're probably looking at a capital cost of somewhere around $800 million. Mm-hmm. And so how does a $30 million or $40 million company finance an $800 million project? And quite frankly, the way that we've been proceeding on this path is to get a strategic partnership. There will be some kind of project debt and equity component, and we're looking for the equity contribution from a strategic partnership. Now, 2 years ago, there was all kinds of people knocking on the door looking for cobalt because people believed that we were going to $50 cobalt, and the DRC was able to respond to the higher prices a little faster than some people thought. But in any event, 2 years from now, we are going to enter into a sustained period of deficit supply, and new sources are going to be required, and they're going to be required that don't have the risks associated with the DRC, or for that matter, processing in China, because China is responsible for 60% of cobalt processing globally.
Okay, I know I'm a buyer of the macro story. I think cobalt will come back. It's just, it's in a dip at the moment. But how do you have those conversations today with a market cap of your size? And if I look at the language in your presentation, there's a lot of, you're very early stage in many ways. You've got a financial feasibility study, but you're also kind of very early stage. So if the language is, we talk about, validation of pilots, we talk about test mining, development work, potential for the future, bulk samples, negotiations, identifying, all of these words suggest that you don't necessarily have all of the pieces together that you want. So negotiations must be hard.
Just the opposite. You've all of those things have actually validated what we've been saying, and unfortunately, that's the process that we had to pursue, because for example, the strongest economic attribute to our project is a very high concentration ratio. So when we subject our ores to flotation, we concentrate all the recoverable metals in only 4% of the original mass. So when you're processing at 4,650 tons per day, you're producing 180 tons of concentrate containing all the valuable metals. All of these kinds of things have to be validated in feasibility studies, because they are not mainstream metals. And the investment community is typically focused more on metals like gold and copper and nickel. This whole evolution or transition into the importance of technology and eco-metals is a new thing. And the sort of mainstream and sort of typical investment community is just trying to get their head around this, and it's complicated, because they are technical projects.
They're very technical projects. They are very technical projects.
You have to go through validation.
Great. Let's talk about some of the commodities there. Obviously, do you mind if I start with the gold bit first? Okay, so
Sure.
What do you know about the metallurgy? What do you know about the economics around being able to extract gold and make money, even at today's prices, say?
First of all, the ore in our project is comprised of 4 overlapping envelopes of different metals. So we can make ore only on the gold in places, only on the cobalt in places, or a combination of the 4 metals that are in the deposit. And the gold part of our project is actually quite high grade. Even though the reserves are 1 gram per ton, which would be ore itself in most gold-only deposits, we're actually mining areas that are 5 to 10 grams of gold or no gold. The average is really non-existent, and that's the rationale for going underground and mining approximately 1/8 of the ore in the first 2 years of production comes from underground mines. The underground part of the mine, which is focused on very high grade gold. We get intersections up to 62 grams over 2 meters, for example. Now, in terms of its distribution, I said it's kind of localized in the central core and the deeper parts of the deposit, but it's free gold. It is recoverable by flotation. In fact, all of the losses we experience in just about every metal is through flotation. So we go through that very simple, we crush, grind, we float, and we recover. The gold actually is grade dependent. So where we have high grade gold, we get very high recoveries in the 85% range. Where we have low grade gold, we get low recoveries. So we have a range in recovery that's built into our block model.
So can you mine the gold, recover the gold economically at today's prices?
As part of the deposit that is also being mined for the other metals.
Right.
It's possible that there's a gold-only deposit there, but it would be very small. And you have to keep in mind that we're operating up in the Northwest Territories, where we're going to have to invest in a $30 million road, a camp facility to accommodate our workers, all of the process facilities. So you have to have a certain critical mass in order to basically pay back that those costs. So focusing on a very small deposit is not an attractive way to develop this asset.
Absolutely not. But so when will you know the scale of the opportunity or the scale of the resource, quite frankly, to understand the economics better than you do today?
We understand the economics right now at 4650 pursuant to a feasibility study, which was positive. So we already have that. We've done all the work that you're referring to.
Okay. So because I know the phrase from the PowerPoint, you say that it's a well understood deposit. So I assume from that you obviously with the, I've forgotten how many drill holes, 300 and something drill holes, 335 drill holes. You've got a lot of data. Is it enough? Again, coming back to your conversations with strategic partners, which you've talked about, and you did talk about these, the beginning of last year as well, May last year. How are those conversations developing, and what data are you able to talk to them about, and what are they getting enthusiastic about? If they are getting enthusiastic about it.
Yeah, I would say that the over the last couple of years, the kinds of companies that we're talking to is changing.
Okay.
So where there was a year and a half ago, we were focused very much on car companies and battery companies and people who had a strategic requirement for that cobalt, and they were quite desperate. We have confidentiality agreements with I think about 3 or 4 car companies, several battery companies. Now the dialogue has kind of shifted more to Canadian mining companies who understand mining projects, because quite frankly, General Motors doesn't want to be in the mining business. Neither does Volkswagen. They will be in the mining business if they have to be to secure a metal that is absolutely essential to their business. But that urgency has dissipated over the last year. So the kinds of companies that we're approaching now are very different.
So you're approaching them, they're not approaching you?
A little of both.
A little of both. Okay, fine. And so does that say to you you've got to make this more about being a mining company again and less about the processing in terms of focus and over the next few months?
No, the economics and the project are predicated on primarily on a process solution. But I mean, we do have 1 million ounces of gold. We are an Olympic Dam or IOCG type deposit. So,
well tell me about that. Tell me about that, because you're talking about well understood deposit, Olympic Dam deposit. Sounds good. Why do you say you qualify to call yourself that?
Do you want to get into some complex geological discussion here?
You know I don't, but but what I do want to know is when you're talking to strategic investors, why you're able to make that statement confidently.
So let's just say that the scientific community and the geological and mining community accepts this, that we are an IOCG deposit. So what does that mean? That stands for iron oxide copper gold. The largest deposit in that class is the Olympic Dam deposit in Australia, which is about 7 billion tons.
Yep.
Other global analogs would include the Carajás deposits in Brazil, which would include Salobo, Sossego, Alameo, and these are commonly in the billion-ton class. Mm-hmm. And there's the Candelaria deposits in Chile, which are billion tons. So when you talk to technically minded mining companies, Canadian mining companies, about the opportunity for an IOCG scale target, and the fact that we already have 33 million tons in one deposit, plus a satellite deposit of 10 million tons in our Soudayan copper deposit, then we're starting to talk about world-class opportunities. We have geophysics that have enormous anomalies that are untested. And we talk about, well, why haven't we tested them? We spent $130 million trying to get what we already have into commercial production. So going out and blowing our brains out on a whole pile of additional drilling isn't really making money for our shareholders. So we're very focused on getting the current deposit identified. Although is this additional exploration opportunity that you are looking at.
Well, not yet. Focus. So let me talk about that. It's interesting what you just said. You spent $130 million and you're not going to go and blow your brains out and drill more. I think that probably makes a lot of sense. Why should anyone give you any more money? You spent $130 million, market cap's 30. If it's not entirely down to the price of cobalt, and it's not, you've got a very, very large integrated project here, and people aren't giving you the value for that. Whose fault is that? The market's fault, or is it your fault?
Well, first of all, this isn't endemic to Fortune. This has been an issue that has been associated with mining generally. We are a very capital-intensive business, and regulators and the additional hurdles to get a project into commercial operation are synonymous with all mining projects today. Mm-hmm. And if you look at other analogs, and including in other commodities, you'll see the same kind of situation. It takes 20 years to build a mine in today's environment, and that's not getting any better. In fact, the Canadian government is kind of sucking and blowing at the same time right now. They have determined that why don't we have these critical projects like ours getting across the finish line? At the same time, they are increasing the length of time that takes to develop projects. They are converting most of the Arctic into a park, and they're just making it companies go through very cumbersome processes, which is not accretive to shareholder value.
Okay, so back to the question: why would anyone give you any money?
Because at some point we're going to run out of these metals. And if we don't develop these projects, then we're not going to be able to transition through to electric mobility. We have to have metals. Okay. And I think these kinds of processes go through pendulums where the environment gets very attractive for mineral development because we have high commodity prices, we get good shareholder returns, and it goes the other way.
Right.
And at some point, we're going to run out of key metals, and there's going to be very, very high prices.
Okay.
As a consequence.
Okay, but let's bring this back to you. Those are very general statements, very generic statements about mining in general. Security around various metals and battery metals, etc. The general statements. What about you? How are you gonna deliver value for I imagine long-suffering shareholders in any time in the next 2 or 3 years? I mean, how do you accelerate a process? In fact, what is the process? Give me that business plan for the next 2-3 years. What does it look like?
Sure. It's essentially, as we've already discussed, we are in the process of talking to strategic investors, and we are looking for a project equity partner to develop this asset with Fortune. And that comes with the credibility of proven experience in mine operations, as well as the balance sheet to get this project across the line.
But the balance sheet of your partner to get it over the line, correct. Right? And your experience in terms of understanding this deposit. But how do you move that from conversation into a deliverable, an action? What's going to get these guys over the line? What are they telling you they need before they'll pull the trigger?
Well, there's I can't talk about specifically about discussions we're having with any particular company, but most of them go through a process of analyzing data. We have a data room, mm-hmm. Which has all of that data is compiled and available for companies that enter into a confidentiality agreement. And we are at various stages of discussion with different kinds of companies. Some of them are very advanced that could pull the trigger at any time. Some of them are kicking tires.
Oh, so coming back to what you said earlier, these are mining companies in there now, not so much the automotive, in advanced diligence on your data room.
No, the car companies, some of them are still at the table.
Okay.
I think if you're watching the space and battery materials, you will note that Tesla concluded a transaction with Glencore fairly recently, and obviously a car company is going to prefer to transact initially with a current operator than a development asset.
Right.
But car companies are at the table. I would say that those discussions are not advancing as quickly as the ones that are taking place with mining companies.
Okay. So how much cash have you got today? The presentation suggests a couple of $1 million. Is that right?
It's a little over two.
A little over $2 million, right? And that will see you through.
It really depends on activity, and we have raised a little bit of flow through. We are looking at a couple of geophysical anomalies that are on the property. But our focus is really on partnerships. Mm-hmm. We're also remodeling the deposit. Earlier in our conversation, we talked about a mistake that we made in expanding the project. We're actually dialing it back the opposite direction, mm-hmm. focusing now more on a little bit smaller but higher grade deposit.
Right.
So we're doing that work currently and hope to have it completed in the next month. And that will hopefully translate into a deposit that may not be significantly smaller, but have higher grades and particularly more gold contribution.
Okay, so because you announced this sort of technical report, 2007. Well, it says 2017 here, but you're saying because you've changed the scope of the technical reports, you think by Q1, let's say Q1, be generous, it's Q1, you'll have that complete and ready to announce to the market.
No, we'll have an updated geological model in
okay. So how does your shareholder register break down? How much is institutional versus retail?
Hard to know now. We've got a lot of shares outstanding. We're about 340 million. Yeah. We have institutional ownership of the company, and we also have a strategic partner. We had a partner that was going to finance the project in 2014, a Chinese company. Yeah. They currently own about 10% of the issued capital. So that was another issue. I mean, in 2014, we were at very advanced stage of probably 2 weeks from pulling the trigger on building the project with a Chinese partner, and that company, which is a subsidiary of Sinom, the China National Machinery Company, was looking for battery materials. Was also had purchased a Canadian mining contracting company called Procon, mm-hmm. And Procon was going to develop this asset in partnership with Fortune in 2014. Mm-hmm. That's when we went through another cycle. Unfortunately, metal prices declined, but it was also the period when Premier Xi ascended to power. There was a lot of audits taking place in state-owned enterprises. People ducking for cover as a consequence, and unfortunately, our project, although it was partially consummated, didn't proceed.
Interesting.
So, I mean, there's another example where, a couple of year delay because we virtually at the altar with a company that just wasn't able to come to the finish line. Okay,
so I guess what you're saying, the question I was going to ask is, do you get investors coming to you frustrated? What are they saying to you? What are they asking you to do? What are you telling them?
We have very supportive shareholders, and like any public company, we've got some grumpy ones too. And
what are they saying? What are they saying? What are you hearing?
Well, we'd like to. Like any other shareholder, they want to see a return on investment.
And what do you say?
I am a large shareholder of the company. My share position was worth $50 million at one point.
What's it worth today? What's it worth today?
Probably $1 million.
$1 million. Okay.
So it's not a. I am as frustrated as anybody at the length of time it's taking for this project. It's I haven't gotten rich on the back of my shareholders.
Yeah, but likewise, you guys get paid a salary, they don't, so their money's tied up in this thing. So that's a very different scenario for you as it is for them. Okay, so you're sitting at about $1 million of shares. Okay, interesting. I mean, actually, there's an interesting topic. So, I mean, how have you and your board reacted to the share price? Have you cut your salaries, or how's your remuneration look like? Does it reflect the market, or is it just business as usual?
To some extent, we have cut back over the last few months. There are a couple of people that are transitioned to half time. We're a relatively small company. We can't just not pay people, or they're going to move on. That's so we do try to be mindful of cutting back on certain expenses, investor relations. We're not attending some of the conferences that we would normally attend, Cordilleran Roundups next week, Cambridge Show, which we would normally attend, and we're trying to be respectful of our shareholders and our cash position, and we're not attending this.
Right. And do you think you're going to need to go and raise some money this year?
I can't tell you that that would be dependent on our discussions with strategic partnerships. Some of those are advancing very well, and if somebody pulled the trigger very quickly, there would be no need to do that. If we were not successful in securing a partnership, we'd probably have to raise some money.
Right. Okay. When do you make that decision? Because obviously you talked about 2014. You talked about May last year. Talked about strategic partners being advanced discussions. I appreciate you saying the same thing, and you're not in charge of whether they might pull the trigger at their end or not. But at some point, you're in control of what you're in control of. At what point do you say we've actually got to make that decision now?
Yeah, that decision is not imminent, and we are sufficiently funded right now to get through the process, in particular with one company that we're in discussions with. So, arguably two companies that we're in discussions with. So, if those advance to a transaction, it won't be necessary.
Right.
If we never allow the Treasury to go down to very low levels, or your negotiating position when you're trying to raise money is very poor.
Yeah. Okay. That's fair enough. And if I may just finish off on terms of, you have touched upon a lot of these topics during the call, but 2020, you've got $2 million in the bank. You're advanced discussions with strategic partners, which is seems to make a lot of sense to me. You've got to get them over the line. But what are you going to spend your time on, and what do you think is the most important thing to spend your time on over the next certainly this quarter? Let's go with this quarter.
Sure. So there's probably three projects that we're very focused on. One, I talked about the reinterpretation of the geological block model. Mm-hmm. Again, this is a little technical, but we've recognized an opportunity to rejig the model. A very slightly smaller deposit, higher grades, more gold. We want more gold, obviously, to reduce our exposure to volatility in the strategic metal space, because those metals do have very, very significant price volatility. We're also focused on strategic partnerships. We've talked about that. And the other opportunity that we are pursuing is a lower capital cost solution for our downstream process plant. And in particular, there are two projects where one of which we can take an existing plant that is already producing some of the commodities that we're producing, leverage some of the redundant facilities, oxygen plant, rail siding, office and warehousing, those kinds of facilities are already in place, which would reduce the capital costs for our downstream process plant. We're also looking at another opportunity where an existing processing facility will close in the near term. I can't mention either of these because they're under CA. And then also the Canadian government has decided to, or not decided, they have entered into an arrangement with the U.S. government to ensure Canadian supply of critical minerals. So we're working with Natural Resources Canada on what we perceive to be the best way that they can help that happen, which is financial support for downstream processing. I think one of the other, I mean, we touched on this already, but the challenge when you have a critical minerals or some of these technology metals is you can't just simply build a mine and a concentrator and ship that material to somebody's downstream processing plant. They either don't exist or they're not configured properly for the concentrates that are there. So you're committed now to this much higher capital cost project of funding a vertically integrated project with a refinery, a mine, and a concentrator. So that doubles the capital cost. Certainly, it's well, for 800 million. Yeah, it's 450 million for our mine, 350 for the refinery. So having some government support, whether that be loan guarantees, grants, equity participation. The U.S. Department of Defense has already invested in a rare earth metals project in the United States. And Trudeau, our Prime Minister, has guaranteed to the President of the United States that Canada is going to be there in the supply of these materials. So NRCan is now basically been Natural Resources Canada, I'm using acronyms, has got to come up with solutions to basically enable some of these projects to get across the line. So there are good projects in Canada like ours that are essentially at the construction development stage. There are also projects in nearby that have rare earth metals. And a lot of this is being driven by U.S. exposure to defense materials. Yep. Whether it's battery materials like cobalt or rare earth metals used in some of the defense applications. So you talked what's going to drive people's investor interest. These are the kinds of things that will do that.
But those are the macro stories. Those are the macro stories which drive that. I've been keen in this conversation to understand what you're doing about it to deliver your shareholders that payback that they need.
So we're actively in dialogue with Natural Resources Canada. What that translates into, it's too early to tell. You asked me what I'm doing over the next quarter. Resource modeling, partnerships, and a downstream process solution at a lower capital cost. That's what we're concentrating on.
Good. And I need to ask, I did mean to ask you earlier, so what is the size of the bismuth market? What in dollar terms? What's it equate to? I don't know much about it, I have to admit.
Yeah, unfortunately, and there's not very good publicly available information. But the size of the market is inaccurately reported in some of those public disclosures. It's somewhere between roughly 17,000 to 20,000 tons. The current price has been very volatile because are you familiar with the Fanya exchange debacle that was in Shanghai?
Yep.
So Fanya was a Ponzi scheme, and unfortunately they had accumulated large inventories of minor metals, including bismuth. In fact, bismuth was their largest holding. The price of bismuth has ranged anywhere from, on the spot market, around $3 to $23 in 2006, I think it was, or 2008. The fair price for bismuth is probably around something around $10 per pound. So if you've got 20,000 tons times
10,
2204 times 10, that's the size of the market.
Okay, so it's not big, not a big market.
No.
Okay.
No, it only represents about 10% of our revenue.
10% of your revenue, and okay. And do you have a sense of how much of it you got yet?
Oh yeah, we have 12% of the global reserves.
but you got to get it out of the ground, and you got to get it out of the ground whilst making money. Robin, thank you very much for your time today. That was a lovely introduction to your company. I guess people are going to be keen to see how these conversations manifest themselves in the next few months for you, and I hope you get that strategic partner on board.